What's up, dude? So this video is, the intention is to help you improve your win rate. So for me, what I found when I was incorporating my lower time frame setup, so I switched from my higher time frame to lower time frame because I realized that I don't like sitting in trades all week, just being in open trades all the time, going to bed with open positions. Yes, I can do it, but if I want to create something that's going to be sustainable, that I'm going to do for the rest of my life, let's say, I want that to be the way that I want to do it. So I made the switch from higher time frames to lower time frames. What I found was I had my set of simple rules. They worked brilliantly, but the win rate wasn't where I wanted it to be. So for instance, let's say this is Asia. Can you see that? Yep. This is Asia. Then we go up. This is London. And now New York opens up here. So now, let's say this is Asia's low. Extend that here. So this is our point of interest. So I'm looking to take a trade after we have a 1 minute break of structure. Let's say, for example, you might trade a 1 minute break of structure that leaves a fair value gap, and then you can take a continuation from there. So I don't actually trade fair value gaps as part of my entry, but let's say price comes down here, and then we get a 1 minute break of structure, and then we enter our trade. So I would always opt for simple rules over complex systems. So my strategy was, so price comes to a area of interest, we have a break of structure, and then we have a coil. So what was happening was price was coming to my area of interest. This is the rule that I added. So I would be at my area of interest, have a break of structure on a new 15-minute changeover. So again, the rules don't necessarily matter. It's just that, let's say you have very simple rules. Price comes to your area of interest, have a break of structure, leave a fair value gap, and we have a reaction from that. Or price comes to my resistance zone, we have a hourly break of structure, and then a 30-minute continuation. The rules don't matter, it's just having a set of rules. But, so we come here, price comes to my area of interest, we have a break of structure on the 1 minute, and a new 15-minute changeover. So a new 15-minute candle begins, and we break structure in 1 minute. Before, I was entering here, and I was measuring the range here, and then just taking it for an expansion up. It was profitable, and it made money, but it was only about 55%, which is fine because it has a positive risk reward as well. But I wanted to improve it, and the way that I did it was incorporating one extra rule, and that was waiting for price to actually then create a coil. So I was studying my playbook and looking at all the best examples, and all of the best examples happened in and around the 15-minute changeover at the area of interest with the break of structure. But then after they had the break of structure, they would then slow volume down, coil, and that, what I mean by coil is they would literally just kind of consolidate and drip feed the price down. So it looked like it was going to continue short. And then after that, what happens then is I wait for a 1 minute break of structure of the coil, and then I enter. And then exact same trade, measure this expansion up, and then boom. Because without the coil, and so just to round it off, by incorporating the coil, certain times I will miss the move, but overall the win rate improves dramatically. Like, I'm talking like 15% improvement on the win rate. So that means that I'm taking less trades now, but my win rate is higher, so I can actually put more size on those trades. So it's pushing like 65, 70% if you wait for the coil. Because what can be happening to you, and what was happening to me, was getting my entry here, take a trade, it would continue down again. And then maybe in the second hour I would have another break of structure, get an entry, and then it would just peter down. And then I've already taken 2 losses, and then third hour comes around and boom, then the move happens. I was getting so frustrated that I kept taking losses before the actual move came. So then by the time I caught the move, half my profits were gone on these 2 losses here, or I took the loss and then walked away and then ended up missing the move. So by incorporating this, yes, we will take less trades, but it will keep us out of giving away silly profits, which helps with the mental, and then also it preserves our capital, so then we can actually, instead of taking 5 trades or instead of taking 10 trades and winning 6 of them, we can take, let's say, 6 trades and win 4 of them. And then on those 4, because we're winning 4 out of 6, we can actually increase our position size. So the difficult part of this is that we have to watch trades go without us certain times. That is difficult, but we have to just drill home that it is for the greater good. Like, it genuinely, we're looking at price going away from us and we're thinking, oh God, I'm losing our money here. But in reality, because we're executing this across a series of trades, overall we're actually making more money. So we have to remember that. So to go over it, and this can be used on any time frame, but I'm taking it on the 1 and 5 minute. So price will come to an area of interest, and what we really want to see ideally is, let's say, a little consolidation here, another small consolidation here, and then for price to kind of go sideways. So the best moves that I've found come out of consolidations. So I view the market as in breaths and out breaths. So the consolidations are the in breath, and then the exhale is the expansion. So yes, sometimes price does go down and then boing, has just a pin reversal. That does happen sometimes, but we are not trading that. Again, I say we. I'm not trading that. So many times I'll think, okay, yeah, this could be this pin bar that I just catch at the very bottom and then it goes. And then you end up catching one, you think, oh fuck yeah, I'm gonna do this every time. And then it's very rare that happens, or it's a lot rarer, let's say. So instead of trying to catch the pin sometimes, I now only take my lower time frame reversal if we have a consolidation. And basically what we really want to see is price grinding, eating into an area, and then ideally take the low out, then break structure. Doesn't have to do that, it could just break the structure, but then what I want to see is the coil back. So at least 2 to 3 candles of price, ideally more, ideally like 5 or 6 candles, and then boom. So just to hit it home, we want the best lower time frame reversals come outside of consolidations, not pins, and then we want to have our break of structure and then a pullback again. So instead of just entering on the initial break of structure, we wait for price to actually pull back. And this is basically like why, like people talk about trading for value gaps, like this will leave a fair value gap and price will pull back to it. I don't like to use that because there's so many fair value gaps everywhere that it becomes subjective, that I like to frame it in, I want a consolidation, price to have the breakup structure, and then coil afterwards. Cool. Again, just last thing, price will have this breakup structure and then just continue up. Sometimes happened on EU today. So I was watching EU, really coiled, eating into the low and just going sideways. Like I was like, okay, this is setting up beautifully. Had the breakup structure, 1 minute candle, and then we got another 1 minute candle, 2 1 minute candle, and price just ended up going. So I didn't get an entry in that, but what ended up happening on GBP AUD, very similar, came down to an area, went sideways, had our breakup structure, and then we just went down for like 5 minutes. As soon as we had that second breakup structure, so I call it a fractal break. So first break, coil, fractal break, boom, stops below the low, and happy days, straight to take profit. Lovely. Yeah, I'll leave that there. If you do trade lower time frame, I think this will definitely help improve your win rate.